Well, good morning, everybody, and welcome to the today's restaurant networking group. Today is July 24th, and it is 9 a.m. My name is Howard Appel. I'm the founder and publisher of today's restaurant, and we are a group of vendors who are here to help each other and to help any restaurant owner, manager, chef with any questions you might have. And if you'd like to submit a question, you can go give us a call at 561 620 8888 or go to our website at trnusa.com or send us an email at info@trnusa.com. And while we're at it, I mentioned last week that we're starting this new column in our paper called Today's Restaurant News Forum. And I'm looking for folks out there who are listening to this or watching this, and the folks on the board. This is an area like a clearinghouse for the restaurant industry where people can voice their opinion, ask a question, make a comment, or an observation. So I invite you, and it doesn't have to be food service related. It could be love life, could be politics, it could be whatever you feel that you're carrying around that you want to get off your shoulders. Yeah, and
Isn't
I'm
that
telling
getting a
the
little
truth.
personal?
Yeah, personal.
I
So
could
just what we're going to do is for the early part of it, send us an email at info@trnusa.com, and we'll try to answer it. And if we can't answer it in house, we've got a cadre of experts within the two groups that I can turn to for answers. And if they can't answer it, we have experts in the field that we know. And if they can't answer it, I'm going to go to Chris and have something written comedic.
Let me in, Coach.
It's going to be called Dear Terry and Howard.
let's hope.
All right. Now, the other thing I wanted to mention was that it's come to my attention that people in the group and in the industry do not realize that on our website there is a tab called Submit Press Release. This is for folks, the readers, who have something that they want to get out to the general public in the form of a press release or a paragraph. All you have to do is click on Submit a Press Release and fill it out, and it automatically gets sent to us, and we'll try to get it into the next edition. And there's no charge for that. It's not an ad. It's information. For example, so let's say Chris got a brand new account and he wants everybody to know about it. He could let us all know. Or Steve sold the property that he's happy to do. Let us know. All right. And again, want to remind everybody about the Florida Restaurant Show, October 25th to 27th. We still have some available booths in our pavilion. So members and new members are able to take a space in that pavilion. If you want information on that, give me a call at 561 620 8888. And so officially,
Howard, did you see the email? Can you hear me? I said, did you receive, this is Rudy. Did you receive my email I sent you a few days ago in regards to getting a call on the books with me and Andy?
No, I didn't actually. I sent you an email.
Yeah, I responded. I responded with it. So that's why it was odd that I didn't get a response back, because I'm like, well, I'll just talk to him on Friday. But yeah, Andy and I just want to get on the phone and, just have a conversation with you and to solidify a spot.
Yeah, absolutely.
Okay. What I'll do then, I'll send another email to you, and then you just, is there any time in particular that works for you automatically, so I don't have to go back and forth, or?
Not today.
Okay.
Monday would be fine anytime.
All right. I will follow up. Thank you.
Okay, thanks. All right, so we are going to have a presentation today from a member, an in-house member. So Steve Whitehill is our resident business broker. And Steve, I'm going to turn it over to you.
Oh, if I can share out my screen.
While you're doing that, can I just make one comment to the group?
Yep.
Thank you. What I would like, especially Nick, I keep seeing press releases from many companies now that are coming in from the network, coming in from the website. And a lot of them are what is being done here in the group, your companies. What I would like from each of you, and I'm not using a lot of them because obviously for a reason, but what I would like from each of you is a press release with a photo that I can put in the what's going on section. Okay, so that's really important because I don't want to use a competitor's press release when the group here has the opportunity to submit it. And, you know, this is our group. So without further explanation, please send me a press release. Chris does all the time, except it's an ad, so I don't really know what of it he needs really bad. Chris, send me anything that you need, like desperately, with some kind of, logo, whatever. Like you need an executive chef, like right now, here, there. I will put that in. Ed, you're trying to sell a specific machine. Give me that with the photo. Nick, especially you with insurance. I keep getting press releases from commercial insurance companies for restaurants. I have not used any to date. Steve, same with you, and Brian, certainly for leasing. So with that being said, I'm sorry, Howard, but I needed to say that.
It doesn't preclude any company. All right, go ahead, Steve.
Okay.
Terry, where is that going to be posted?
I'm working on the September issue now.
Okay. What's the deadline for that issue?
It would be like August the 15th.
Okay.
Thank you.
Yeah, thank you.
So good morning, everybody. Today I'm going to be talking about really business ownership and how you do that. And that's effectively what I do. I help people really do one of two things. Get out of what they're doing now and either retire or go into something else, or essentially acquire a business. And we're going to talk about that today. So the subject is, always look at all the retirees retiring in their early 50s, and they think playing golf is a full-time occupation, but frequently they discover it's really not enough. But truthfully, business ownership can really start at any time, although I find most of my clients that journey starts someplace in their very late 30s into their 40s, and frankly goes all the way up through their 50s and higher. So first thing to do is to recognize the need for change in your life. It's, I have a friend who is a big time golfer. I'm going to see him actually tonight. And he only plays 3 times a week. I don't know what the hell he does with the rest of his time. I'm still working because I enjoy it, and I don't know what I would do, even if I were a golfer with the rest of my time all day. So recognizing the need for a change, whether it's you're retired or you're just working for somebody else, and you feel unfulfilled. you've been doing this for a while. You feel you can do more. You're not getting the opportunities, and you want to sort of reach out and do something different. So you need to identify really the problems, where there's lack of motivation, feeling unskilled, feeling unfulfilled, excuse me, uh, or really just if you think about it, buying a business and operating is a desire for an autonomy, which is more frequently comes up more frequently than you might think. I mean, how often when you work for somebody, you feel that the boss is an idiot and I can do this better? It's that kind of feeling that you need that should be that itch ought to be scratched and see if it's something good for you. The first thing you got to do is see where you want to go. You got to take a look at your background, see what you can do, make a list, all those good things that you hear about. And you need to understand what the forward direction really is. You need to set goals. You need to make, your decisions should, of course, should always be informed, and it should meet your desires. You really got to think about what is it I want to achieve, which is part of goal setting as well. I don't want to sound like a psychologist because I'm not. I'm not even sure I believe in all this crap. But in any case, but what is true is your emotional state doesn't influence your well-being. So you want to take that into account, and you want to when it relates to what you do most of the time, which is work, it should really be an important part of your life. You want to make decisions that fulfill you. And you need to take into consideration where you want to go. You want to do things in a reasonably organized manner. You want to evaluate the process. And again, you want to select clear goals to achieve them. I'm sorry, I went backwards. Okay, so let's explore your options. You can either start or buy a business. Now, I have a predilection towards buying, but let's take a look at both. So let's take a look at starting a new business. When you start a new business, you have creative control. It's your idea. You can do whatever you want. And that's including whether it's a restaurant, you may think you can do barbecue better than the next guy or whatever it is, or maybe you have a very interesting dishes that you can prepare, or your motif and your environment that you can set in a restaurant is better than what your competitors you think you can do. Those are all things that you can do with creative control. Of course, with any new business involves significant risks. So starting up, you take on an additional risk of success. And it's multi-level. I mean, it includes financial loss as well as time loss and all the losses. You really need to think this thing through. And it's a process. If you think about starting a business, you got to find a location. First of all, you got to find a concept. You got to figure out what you want to do. You got to figure out where you want to do it. And then you got to figure out how you're going to pay for it. And it takes time. When you buy an existing business, the advantages are multifold. You have an immediate cash flow. Day one, you bought the business. Day one, it's making money because the day before it was making money. You have an established customer base, which means that it's going to continue to operate in the same fashion, assuming you don't make any changes, which we'll talk about later. I don't recommend doing initially. However, there are frequently hidden challenges. And, I used to really get upset by it. I will tell you that during the purchasing process, you will do all sorts of analysis, which we'll talk about shortly. But what I've always found is there will be always some problem that you haven't identified, and nor did I see. And your job is going to be to resolve that problem. What's interesting is nobody that I've sold a business to has ever failed because of these challenges. If you're a good business person, most people who go into their own businesses they know how to resolve It used to trouble me a lot, but then when I realized that everybody was capable of doing it, it made me much calmer with the whole situation. So in you got to evaluate in buying a business, you got to understand what your skills are, your financial resources, because in all cases, you need to, well, in most cases, most of us don't have the money to really plunk down and buy it for cash. So you need to understand that process. And you need to also evaluate your understanding of the market and how to deal with that. So these are the steps to starting your own business. I didn't realize this slide moved. Who knew? Okay, it's again, as I indicated, you go through and do research on the field that you're interested in. You need to do a personal assessment. And most important, you really need to understand who your customers are. It's not who you think they are, but you really need to figure out who they are. You need to do some research because you may think you have a great product, but if no one wants to buy it, it's not worth anything. And this is what I was saying. You got to do the market research. You got to understand your audience and create a business strategy. This is both easy and tough. It's identifying funding resources. This is especially true for a new startup. They typically require more money, both initially and over time. If you think of starting something up from scratch, so you have this idea, you want a restaurant, so you now have to find a location. That location isn't ready. You got to make a significant investment in equipment, furniture, and fixtures. Then you got to essentially find people to operate it. And then you once you're ready to go, you have this grand opening and all your friends and family show up and tell you how wonderful it is. But now you got to get customers, and day one, you don't break even. You're going to operate that as a loss for a period of time. And that can take anything from typically 3 months to 3 years before you're really making significant money. So there are costs involved, and you need to be able to feed a business for an extended period of time before you can start making money with it. We're going to talk about now the opposite side, buying a business. So when you buy a business, you find a business for sale. You evaluate whether it's what you want, and then you figure out whether it's a viable business. Not all businesses are viable that we sell. Some of them may have challenges. Some businesses, for example, are contractual. So a person who works on that particular job, when he's finished, he's got to find another contract. So is it something that you can do? You have to assess, it still may be viable, but is it viable in terms of your abilities? You got to really delve into the details of the business when you're analyzing and it's reviewing the financials. And some people are capable of doing the details, some aren't. My recommendation is almost always to get a financial professional, I really mean a CPA, involved. And personally, the CPAs that I recommend have a very good audit background, which you really don't find very frequently. Now, all CPAs are trained to be auditors. Most of them don't have a lot of experience with it. Now, why is that important? Because it's one thing to say the numbers all add up correctly, but it's another thing to say that all the numbers in the financials are correct. And that's very true with banks. I wrote a piece for LinkedIn Wednesday that dealt with the fact that I have a business I'm selling that I have a buyer for. And now my problem is getting the bank to accept the financials of the business. And there are two reasons for that. One is in this case, and I think we'll get into it a little later, there's something called add backs. So I got to get them to accept the add backs that the owner chooses. So what is an add back? So a simple add back is the owner's salary. Why is that an add back to the profit of the business? And that is because you're going to get that money. There are other add backs that are common that are really not questionable. For instance, depreciation. Depreciation on a financial statement, while it is a real thing, is really something to reduce taxes. So since it doesn't remove cash, since you already bought that piece of equipment, there's no additional investment. It doesn't cost you any more, but you can depreciate it so you can recoup some of the value from by paying less taxes. But so we add that back because again, it isn't using current cash. We add back interest because we make an assumption that really this business is being bought for cash. It's up to you whether you want to get a loan to acquire it or not. But there are other things that we add back too that are become more questionable. Did you take out your wife for dinner and charge it to the business? Did you your kids' cell phones, are you charging them to the business? I've seen people put additions to houses through their business. Now they do that to reduce taxes. That all being said, those are not real business expenses. So we add those numbers back. Now, I can sit here, talk to you, and you say, yep, that's right. And yep, I understand. But the banks aren't necessarily as agreeable with what I just said. So the trick is to have the banks accept them. And I'm going through that situation with this one thing. It can have a very big swing in the effect of profitability. In my case, the business makes someplace, let's call around, without any of these add backs, around 500,000. And with the add backs, it makes about 1.5 million. So the difference, first of all, the value of the business goes from about 1.5 million to maybe 4.5 million. So it can have a very big swing, and the bank will say that's really nice, but I'm only going to give you another 500,000 or maybe 100,000. The thing is, you've got to be able to prove to them that these additions to the profitability of the business that we call seller discretionary income, you can actually put through. They'll accept. So one of the important aspects, of course, is negotiating the purchase price. And then you've also got to take into a plan for transitioning of ownership and a plan for maintaining customer relations. So negotiations, that's something I help you with. I give you an idea of what I believe the value of the business is, and we go on from there. And I have good historical information typically to give you that. Planning for transition is, I give some very simple advice. The advice I give to people is that transition is actually easy. What you don't want to do is what is instinctive and tell everybody you're the new owner. People don't like change. Customers don't like change. Staff doesn't like change. So you don't want to give the appearance of change. You want to make them feel comfortable. So transition is really all about not changing anything. So I tell people, don't go in and say, I'm the new owner. You can say, I'm a new investor. I'm the new chief cook and bottle washer, but anything but the new owner. And the other thing about transition is you don't want to change anything. People are coming to the business because it was working for them. Your employees are there because they understand the old owner. He may be a terrible human being, but they understand who they're dealing with. The new owner may be a nice guy, but they don't know him, and you don't want to lose your staff because they don't know who you are or how they're going to deal with you. So the answer is don't change. And the same thing is true, by the way, with your customers. They really want to, they know what they got. And while what you're going to give them may be better, But if you give it them all at once, you may find they are unsure and leave. So you got to keep that process intact. And we're talking about making the transition smooth. Um, Now, this is always a good thing to do. If you can accomplish this, you ought to, and that is find people who can support you. By the way, that includes the old owner. If you're buying a business, if you're starting a business, then you're typically starting a business, something you know something about. You should know who you can turn to, or you need to find people you can turn to, whether that's operational, financial, or any other aspect of the business. So you need to develop those networks of people you can talk to, so you can have the highest probability of success. You want to set realistic expectations. And I recommend that sort of be minimalistic, because it's if you do more than the minimum, you've won. If you try to go for 100, that frequently doesn't work, and you can burn out. It could not succeed. And you got to take into consideration, as it says down below, work-life balances. Now, some of us are more workaholics than others, so we're going to do that. We already know what the rules of the game are, but you can be overwhelmed kind of easily too. So you need to take all those things into account. And in conclusion, you really need to be ready to embrace change. You've got to understand what the needs are. You've got to explore different options, whether it's buying or selling, or even different alternative types of businesses to start. And you really need to have benchmarks. And on that note, I'm going to say thank you. Was that enough time, Howard?
Yeah, great.
Okay, and then,
Give me back the screen.
yeah,
Oh, Rick
Good job.
made it. Good.
Good job.
thank you.
Does anybody have any questions for Steve? I've got a comment and a question, if
Sure.
you don't mind. The
No,
comment is the slides were fantastic, beautiful, easy to read. Each bullet was easy to read. Was very professionally done.
thank
So
you.
you and I will be talking about that off camera.
Well, I can share with the group a bit without getting into gory details. Um, it started out with a presentation. Give me a second. Do I have? Okay. Let me just share out the screen again for a second. Oopsie. It started out something like this. And it's, it's not, that's not what you saw.
Right.
I put that in, and then, oopsie, here, where are you? There. And it'll, I'm not going to do it here, but if you do the right clicks, it'll redesign it for you and edit it for you. So that's what it did. I let there are various things that you click in here, and I let it
But
work.
is that on Chat GPT?
No, it is it is whatchamacallit, Microsoft's it's built into
Copilot?
it is,
Copilot.
but it's actually built into PowerPoint.
Oh, cool. We've
Yeah.
we've taken some PowerPoints like that, dropped in Chat GPT, and it makes something similar. Not as fancy as that, but
It,
you
it
still
was
have
all
to tweak
done.
it a little bit.
It was all done with PowerPoint.
Steve,
Now, I use ChatGPT and things like that to help me with the slides in the sense of text, but I never found it to be, at least when I did it,
That was very nice.
with
Very
a set of slides that's really nice.
Steve,
impressive. Good,
I'm
Chris.
sorry.
Steve, What percentage of the transactions you've been involved with over the last year would involve the SBA, the person buying a business, getting an SBA money?
About 99% of them.
Really?
Oh,
Yes.
wow.
Yeah. Is, is the
I'm only
SBA
working.
pretty, is the SBA pretty workable these days or?
Well, that's an interesting question, and I'm going to say first of all, SBA is a misnomer. Why am I saying that? Obviously, SBA stands for Small Business Administration, so it's a real federal agency. SBA in general loans no money to us. What they do is guarantee the loan to the bank. The guarantee at the moment, I believe it's about 70% of the loan to the bank. So the banks have a big incentive to give you a loan because their risk is pretty low. That being said, back in the early 2000s, the last business crash we had, SBA took a lot of hits because the banks at that point were 90% covered and they were making loans like out of style since they had extremely low risk. So the SBA turned around and said to lenders, okay, guys, we'll still reimburse you, as we said, that's the deal. But if your loan loss ratio is too high, you will not be an SBA lender anymore. So now the SBA lenders do real underwriting. And so while they're still willing to do that, and it's a fairly easy as a relative term loan to get, banks are now selective, both in terms of within a given area and certain areas. You'll find businesses that'll finance, you'll find lenders that'll finance restaurants, and other lenders won't. And it's not necessarily predictable. So the key is, and Brian, I don't know if you can back me up on this. The key is to find the lender that'll do the deal.
Mhm.
I don't look at interest rates when um, I think it's a bad thing to look at how much you're paying in interest at the rate. Uh, I tell people when they buy business, if you need the money, the question is after you pay the loan, is there enough money left for you to be happy? If the answer is yes, buy the business. If the answer is no, don't buy the business. Because the real issue, as Chris, as you're really alluding to, is can I get the money to finance the business? That's the real question. If the answer is yes, then the next question is, can I afford it? It's really not about rate.
Mhm.
And by the way, it's always a 10-year term. Exception, and it's a notable exception. If there is real estate involved, that term extends up to 25 years. If the more it gets to 51% of the purchase price, the closer it gets to that 25-year term. So if you think about it, what is the advantage? Well, you can pay a lot more in interest over a period of time. However, the payment per month frequently goes down, or it stays the same, or it's maybe even the same, but you've now acquired a significant asset called the real estate. So it's a really a good way to go if you can find it. If you can't find it, I wouldn't, it's not a big deal. But I suggest looking at the acquisition cost the way I suggest. Look at it as um, can I afford it? And is there enough money left afterwards? The other thing that's important to note is that working capital, which we didn't talk about, but that's also one of the things you need to have enough of when you buy business. With the SBA loans, generically speaking, 90% of the time, although they don't say it up front, they will give you working capital that'll be included in the loan, which is kind of interesting because and by the way, SBA loans typically today are 90% of value. So as I say all the time, if you buy $1 million business, you need only 100K. And they look for more money because what they're looking to, and this is also part of the test they do. It's called, and Brian, I'm sure you're familiar, debt service coverage ratio. Basically, what they do is they take a look at the profitability of the business, and then from that, they make sure there's a certain dollar amount, a reasonable dollar amount for owner's salary. And then they take and they say, is there enough money left to pay me back? And it varies a little bit between 1.15 and 1.3 times the loan. So if it's $100,000 loan, if the annual payment is 100,000, they say, is the profit of the business after paying the owner 115 to 130,000? If the answer is yes, we'll give you the loan. If the answer is no, too bad. So they do a not a very tough stress test, but they sort of stress test it. Well, that's one of the things they also look at in terms of reserves. If there's and that's why they do, if there's a problem, two things. Is there enough money? That's why they do the stress test to pay them for a while. And also, does the owner have enough money if there is a problem? Can he sustain himself for a while as well?
Mm-hmm.
The other thing that's also it's required, but I think it can be waived, a life insurance requirement. It's a term, doesn't have to be, it's not expensive, but it has, they want you to get a life insurance policy for the period of the loan.
Mm-hmm.
So like a buy-sell agreement?
No, it's a life insurance, literally a life insurance policy. If they want to have a buy-sell agreement in case, that's a different discussion, but yes, if there's a partnership. The life insurance, you die, they want to get paid. That's really the reason for the life insurance policy. I used to say, and all loans are ugly, but I used to say SBA loans are very ugly because they will take a lien on your house.
Yeah.
Oh, yeah.
They want to make sure that you realize that they are serious about being paid, and you don't think you don't have to pay the government back.
Mm-hmm.
I have a question, Steve.
Sure.
Unless somebody else has a question before me.
Yeah.
Brian?
I was going to comment on the SBA. SBA is a good thing, and sometimes not always the greatest thing at times. And what happens is that, I think, correct me if I'm wrong, Steve, SBA lays down these guidelines and what you have to meet and have to produce this stuff and things like that. And, you get to the point where you're going to try to close on this loan, and then they look at it, and sometimes they claw back, want more stuff, or they do stuff like stupid stuff like, I'm not going to name a client that I worked with, went out and got a bunch of cash advances. Okay. You know what? MCAs, right? So they looked at that like, okay, did this, is this somebody that they want to give a loan to? And it took him an extra 9 months to get the SBA. So realistically, took him almost 2 years to get an SBA loan. And I just won't name the client, but yeah, it's,
Well, okay, so to really back them up, if you use stupid things, they're either not going to loan you the money or make it very difficult.
yeah.
So they look at your total debt.
Mm-hmm.
Okay, so if you take a cash advance or the business's total debt,
Yeah.
okay, if you take cash advances, they're going to look at that and say, nice, but no.
Yeah.
It has to cash flow.
Yeah.
And they look to make sure that that you have enough money to pay your bill. So when they're going to check your credits to make sure your
Yeah.
credits. And by the way, it's not a very high. You don't have to be a 800 credit score. They'll take you. I think it depends on the lender, but even into the high sixes.
Yeah. I've seen it as low as 650.
Yeah, I think I've heard as low as 650 as well, which is not great credit, by the way.
No.
It's just not awful. But they'll look at that, but they're going to look at your total expenses. The other part of it, when you get a credit report, they have a good sense of what your expenses are.
Yeah.
They have it backs up what you tell them because they ask for a financial statement. But they look at that and they say, oh, okay, is the salary adequate? What happens if he can't take a salary for 2, 3 months? So they look at all those things.
Yeah.
Usually it's not a problem, but every once in a while it is.
Mm-hmm.
The other thing that, as I said, life insurance, lien on the house. I can't think anything else you can think of, Brian?
No, just that and also SBA looks at it also has to be the right fit.
Yes, it's I did an SBA loan for a gas station that wanted new tanks. And I figured, geez, that's an environmental problem, this, that, they're gonna be. The first lender I called, they said yes. On the other
Mhm.
hand, I financed a landscape company, and I figured that would be an easy thing. I called my 3 favorite lenders. They all said no. I sort of almost as a last ditch, I called up Wells Fargo. They said, we love landscapers.
Mhm.
No, you really got to find the right lender.
Yeah.
And I don't like working with money center banks usually because they're not typically as flexible as smaller lenders.
Yeah.
And although when it comes to SBA, there are what they call, I believe it's preferred lenders. Those are
Mhm.
lenders that do the underwriting. The SBA doesn't underwrite it as well. Well, they do. They look at it, but they don't do a whole second underwriting.
Right.
If you go to a non-preferred lender, which I've done, and boy, was that a miserable process. The lender does their underwriting, and then they send it to the SBA, and the SBA starts from scratch
Yeah,
and
I've seen that.
and does another underwriting. So not only does it take more time, but they can ask for all sorts of documents the first lender never asked for.
Mm-hmm. Yeah.
I'm going to get my question in, and then we're going to do the intros real quick. And here's the question, Steve. I'm going to use Ed as an example for this question. The numbers are not real. So let's say
Sure.
Ed has got a business and he's looking to sell it for a couple of $1 million. In his business, he's got a general manager who is an integral part of his company and would be a very important piece of the puzzle for the new owner who may be coming in without the experience to run that particular business. How many sales do you see like that? And are they making any provisions for a key person to stay on with a little bit of an ownership stake?
Okay, so I'm going to answer that question. The answer is a little more complex than you might suspect. So historically, the lenders, you could be a chef and buy a construction business if you had the right management background. They look for management experience as
Right.
opposed to very specific industry experience. Now they tend to look more for industry experience. That becomes part of the criteria, and which addresses your question. So, in matter of fact, it's a problem that I'm dealing with right now. This guy has got industry experience, but not hands-on experience. Let's say he's buying a machine shop and he's been responsible for sales in that machine shop. So he knows customers, he knows how to sell them, he knows how to price it, but he couldn't operate a lathe if he tried. So in that case, what the lender wants is, and there is, and to your point, a manager in the shop. He runs that shop, man. He knows what's going on. Everything that happens perfectly. Lender will sometimes say, in this case, they are saying, make a deal with that manager. We want to have a contract, you to have a contract with him. Make him happy. Okay. And they'll sometimes do that. So the answer is yes, it can be a problem, but there is most of the time a solution. Do you have to make that guy a partner? No. Sometimes it's recommended, but you don't.
When I say partner, it's not a 50-50. I mean, I've
Well,
seen
no, in the situation you're talking about, and by the way, I'm going to bring up that specific issue. in this specific situation, oddly enough, this person gets paid 20% of the gross profit. So you would say, well, he's entitled to 20%. Okay, you might be willing to give him 20% of the business to keep him on board. But if he takes 20% of the business, he also becomes responsible for the loan. At 19% ownership, he is
Right.
not responsible for the loan.
Right.
So you have to, you can pay him the 20%, but if you give him 19% ownership, it can be a problem.
Yeah, well, even if there was no lender involved, I've seen on TV that Marcus Lemonis, the prophet, many times when the company's in trouble and they have a key person they want to keep, they'll give them an incentive, 1% or 2%, something like that.
Sure. I mean, yes. I mean, the situation I'm talking about is a combination historical and problematic. So in this case, the number happens to be 20% because that's the deal that was made. Does it have to be 20%? Of course not. It's whatever is reasonable under the situation. But the issue is if there's a key player, whether it's related to financing or not, you probably do want to make a deal with that key player.
Right. All right. Thank you, Steve, for a very informative presentation and very, very professional looking one. I'm going to learn how to do that. That was
I'm
great.
not sure I could duplicate that today, but
all right, I want to do our intros real quick so that we can get it in. Nick, can you start us off? I know you're walking. Okay, so let's go to Chris.
Good morning, everybody. Chris Kaufman, Restaurant All-Stars, providing restaurant talent, primarily chefs and general managers, but also some corporate people. Recently picked up a culinary manager position in Parkland, Florida, an executive chef position in Ponte Vedra, Florida, and currently a general manager's position over in Estero, Florida. Looks like it's time to open up an office in Florida.
yeah,
Chris
come on down.
Kaufman. Chris Kaufman, Restaurant All Stars, 404 All Star, 404 255 7827. Love to be of service to quality companies bringing aces for your great places.
Chris, did I send you a lead this week? I don't recall. Somebody in Atlanta looking for a new position. I got it off of LinkedIn. Sometimes it goes through, sometimes it doesn't. But I was going to mention that during the week, it's real simple to send Chris information because you see things online, people looking for jobs. Chris is the guy. Let's go to Brian.
Good morning, everybody. I'm Brian with Rogue Financial Group. We are a commercial financing company. We work with restaurants, dealers that sell equipment to restaurants, finance startups, franchises, again, small projects, large projects, commercial equipment financing. And we work all over the country. I can be reached at 404 723 7222. Thanks.
Okay, Nick, good morning.
Hey, good morning, everybody. If I lose you, it's because I'm looking for a good connection here, and I've been popping in and out, so I apologize. Nick DeSantis with Brown & Brown Insurance. We're a national or worldwide insurance agency, so commercial insurance. I specialize in restaurant hospitality, but we do everything. We're general lines. Looking for clients that need help with their insurance, that are having problems, that are, their rates are going up. Most restaurants have over the past few years increased their prices, their menus, so their revenues are a lot higher. And many insurance policies for restaurants and bars are rated based on the revenues, the money that they're bringing in. It's that exposure. So the higher the revenues, the more traffic, the higher the exposure. However, they've received increases because just by virtue of increasing their menu prices to where they need to be profitable, insurance has gone up. So in many cases, I can help with those policies that are not rated on sales or non-auditable. They don't get audited on their sales, which means you know, the price up front is the price. They don't have to owe more money at the end of the year. Anybody that's new is a good client. Love to work with all of you if you know, keep my eyes open and reciprocate. But anybody that you know you know, is having issues or is opening new or expanding, those are great opportunities for me. All right, thank you, everybody. Nick DeSantis, Brown & Brown Insurance.
You want to give us your number?
386-299-9540.
Okay, thank you. Rick, good morning.
Good morning, everybody. Rick Israel, Lifeline Insurance Consultants. Our agency is small, and we can come in right after Nick. Once Nick gets all the property insurance taken care of and the business insurance taken care of, we can come in and we can reevaluate the business's health insurance policies, make sure they're not overpaying for the coverage they're getting. We can also look at their ancillary products, their vision, their dental, their short-term, long-term disability, critical illness. And we can also talk with the business owner about a possible a long-term disability product to make sure the bills can get paid, make sure he or she can still have their lifestyle that they're currently living. We are based in Huntsville, Alabama, but we are licensed in Florida and Tennessee. We can be reached at 256-746-9581.
Okay, Steve, you want to give us some contact information?
Sure, I'd love to. So I'm Steve Whitehill. I own Anchor Business Brokers, and I help people buy and sell businesses. And my phone number is 561-376-7500. And my email address is steve@anchorbb.com. Thank you.
Okay, and for the folks out there who may be watching this, we are actively looking for additional members to this group, and we encourage you to give us a call at 561-620-8888 if you'd like to join. We'd love to give you an opportunity. So thank you all for coming. Have a great weekend. We'll see you next week. And let the source be with you.